right, we are live here with Evan. Evan, I don't see your face. No, I'm just kidding. Yeah, Evan. If you guys don't follow him, be sure to do that on X. He's honestly one of the best sources, probably the best source for breaking news, getting that pulse of the market, and that's why we're here today. Evan, how are you?
Roy, I'm excited to be here. I just was enjoying your channel. I've seen the live streams. I'm a fan, and I'm trying to make more content like this. So I appreciate you. I see we already got someone in the chat saying hello. What's up, Jay? But yeah, I'm just excited. The truth is, the way I kind of approach the market, I am looking across a little bit of everything. And I love people like you who are going deep into some of these areas that I'm really interested in. You know, we've talked a lot about, I've met in person, Roy, awesome guy, but we met through the Robinhood event, and it's both the stock that we're interested in. But I know there's a lot going on with SoFi right now.
Oh yeah.
I know someone might allegedly be asking a question on a call later today, and we might want to ask if there's any dilution coming in the next 24 hours. You never know. But now I'm excited to do this with you. You're an expert in the space, doing deep research, and I want to hear more about some of these interesting names going on. We're in earnings season.
That's the fun thing about the market is there's a lot of different ways to look at it. There's some guys that are traders and they're very technical based. There's guys like you that are more broad. There's guys that are very focused on macro. Like you do macro, but it's not like all macro. And then there's guys like
I kind of hate macro, if you want me to be real, but I know it's kind of important, so I have to do it.
There's
some I do care about. There's US macro, we're talking about GDP and inflation, stuff like that. And then we get to the weird point of okay, I don't care about the JOLTS jobs or the ADP employment. Give me one jobs report I'm supposed to care about, one inflation report, Powell, boom. That's my version of macro.
Yeah, I think it was Peter Lynch that said that if you spent 10 minutes focused on macro per year, it's 9 minutes too much or something like that. So yeah, you can over focus on it and overdo it for sure. And I think that's a detriment, honestly, to a lot of the larger funds is they're very beholden to the macro versus a lot of retail investors are like, oh man, there's a dip, I'm buying that. So in hindsight, that's worked out really well this year. Retail especially bought the dip very heavily back in April with the tariff stuff and ended up being on almost every name that you can buy. A good thing, especially in this high quality company. So Robinhood's one that, goes tonight. I think it dipped under $30 and it's over $100 right now. So turned out okay for the buyers there. Now, speaking of macro, I know we don't want to spend too much time on this, but that's probably the two things that are or might drive the market today. One is, of course, the GDP print, and then the Fed rate cuts as well. So did that surprise you that we had a 3% GDP growth? It was a little bit, it's actually 0.5% higher than expected.
Fantastic number. One thing you do one or two things to note, it's going to get revised twice. We'll react to that in the future. So who knows? Maybe it ends up at 2.5% and they were right. It was definitely better than expected. Sometimes you're thinking in there, okay, this Powell, not everything around macro to me just goes back to, okay, Powell rates ? And this was definitely another camp, another hat in the or whatever saying I'm trying to say in Trump's favor of, okay, you probably maybe should be cutting some rates here. Yeah. Stuff is going better with the trade talks, better quote unquote more clarity coming up, and it feels like we're setting ourselves up for Powell to. He can't cut here because that kind of will be okay, Fed independence comes into question, but signaling what's coming next. I happen to kind of believe that Jackson Hole, which is in between the next Fed meeting and this one, that is an area where in the past, when you want to make a change in policy or you want to make a big statement, that's somewhere you can do it. So maybe he holds off today and waits to really kind of make those claims next time. But today's print was just another thing in the favor of, okay, maybe a 25-point cut does make sense in the not too distant future.
Yeah,
we did get some jobs data though. Like I said, I wish we could just focus on NFP at the end of the week. The jobs data, I believe, was not as nice, or maybe it was inflation. There's one or two. Maybe it was the inflation one came in slightly above expectations.
Inflation is sticking up a little bit. Question is whether that's sticky or not. And of course, one of the other reads too, which isn't one of those Fed economic reads, but individual company basis. There's a lot of companies that are reporting. Yesterday, of course, was SoFi and PayPal. Visa as well recently went. Banks went, a week or two ago. And they always get asked, it seems like, by analysts, especially these days, on the health and the strength of the consumer. And it's actually kind of mixed. Overall, most companies are saying, hey, the consumer is fine, it's healthy, we're healthy, everything's great. There are some like PayPal that, signal some caution, and they are actually forecasting in their guidance possibly a 2% e-commerce slowdown worldwide, that they still think that there's some tariff noise, and they prefer to guide very conservatively. So, but you have big guys like Visa basically saying, hey, things are good, things are fine. So I think that that's probably more significant of a read than necessarily GDP, which is a lagging indicator, or trying to read too much into like one month's worth of job data. I think we can overdo it. But yeah, as far as rate cut probabilities, let me show this. I'm usually on the guest and not the lead in, but we'll see if that works. Here is currently what we're looking at by the end of the year is 2 cuts is the main probability, 42%. Of course,
there's only after today, like you were going to literally just say there's 4 meetings left this year. So, if we're going to do it,
96.9% chance that they stay there. Now you can look, of course, at you can look at Robinhood, you can look at Kalshi, and maybe that'll be a little bit different. But nobody's really expecting a cut today. Do you think that that's? It's kind of interesting though, right? Because there's just a few meetings left, and they're expecting 2 cuts. So
yeah, listen, I think that we're sitting here and we talk about the market every single day, so we can play around and ask the question if they're going to cut rates here. They're not. They're if they do, great. We'll react to it then. Maybe you want to be like, okay, but it's just a fun game to play right now. I think what you're actually watching is the signal for the future meetings.
Yeah.
And listen, if I think if Powell cuts here, you might get an initial move higher, great. But I think you might start to hear like Fed independence, blah, blah, blah. Well, I don't want to say blah, 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 but that might be a big concern that people come into. And I think Fed independence coming into being called into question, the negative of that is bigger than the increase we get from a 25-point cut or like a signaling that the rate cut thing is actually here. So I think that the best case scenario, if you're like that person who wants rate cuts, is a signal at this meeting that the next meeting is they're ready to do it, likely, or they use the word live sometimes to kind of signal that it will be a live meeting. To me, that's what you want to hear. But
yeah, the market might be excited about that. I think it's probably overdue, but yeah, I agree. We want an independent Fed, and just Powell's chair is up anyway next May. Tradition is when you remove yourself from the chair of the Fed, that you also resign from your seat at the board too. So that'll give Trump 2 different spots to nominate. There's no reason to remove Powell, honestly, at this point. He's been cautious, but I'd rather have that than cut too fast, cut too soon. Inflation reaccelerates, and then you have to raise again. That would destroy the market. So not be so good. So as beyond macro, what are you looking at today, or at least this week, as far as stocks? There's a lot of stocks that are reporting earnings today, including Microsoft and Meta, of course, Robinhood as well. Grab, I know, is a popular one with retail community as well. Anything stand out to you so far in earnings, or that you're like really excited and interested in that reports soon?
Yeah, it's definitely an earnings time right now. I can even get the earnings calendar up. Let's see how I shares. I have used Restream a little bit. I've not used StreamYard in a while. I know they're like the same thing. Is it sharing my screen? You have to like approve it, right?
Yeah, there we go.
Nice. Okay, cool. So the earnings that I'm watching, like I kind of have them starred, honestly. Those are the 3 that I'm excited for today. Qualcomm and ARM. I know Grab has become kind of a FinTwit favorite or an Amit favorite, stuff like that. Maybe he might even be big enough to the one driving that. Guy has the sauce. But I'm in some Transmedics, TMDX, which was the FinTwit favorite a little bit ago, fell off. We'll see how that quarters goes. But Carvana, Lam Research, Ford, a lot of names that I could see people caring about. But these are where my mind goes to. And on the Mag 7 days, Apple, Amazon, it's kind of difficult to look at a Coinbase, Cloudflare, Reddit, MicroStrategy, etc. So these the type of thing where like I focus in on these on that day, and then the next couple of days I really go in. I may be getting some insights from Coinbase, so I want to make sure I'm ready for that on Friday and prepared. As far as stuff that has happened already this week, I might have gotten pumped. Did I get pump and dumped? What that's my question here. Is what's happening with the SoFi one? Like the timing of it to me was just very surprising.
Let's talk about that. I have a separate video on it too. That's about 8 minutes, so it's brief and succinct, and it looks at the SEC filing. But yeah, it's frustrating as a shareholder. It's probably a good move. Like SoFi doesn't go out and buy private jets like certain stocks that dilute, so we don't have to worry about Anthony Doe doing that or buying a gold mine or gold mining company or something silly like that.
It's just weird communication. I don't get it.
SoFi, honestly, that's one of two. I'm a shareholder. It's one of my largest positions. I think it's probably second or third largest position in my portfolio. Robinhood's number one right now. But the two areas where I've tagged them where they've been frankly weak. Like they've exceptional quarter, amazing execution, but it's communication, especially communication to the market and shareholders as well, and also just development on the tech side. It's just they're not quite where I'd want to, but more so like on the communication side, like it's really odd, and I think it's actually really bad timing. Like that's my criticism of this move. We don't know what it's for sure. There's some thoughts that it's either possibly an acquisition or a couple of acquisitions.
What else would it be for right here? Like they don't need the cash desperately for operations. Like people are like, oh, Bitcoin treasury company. Like that doesn't seem anything remotely likely. Like
that's not going to happen.
What are we doing?
So this also could be for on the lending side. So specifically, you can lend against this as a bank. It is your money to lend against, and because they're a bank, they can do that at a higher leverage. They need less cash basically to lend further, and so that accelerates their lending side. They can also do it because they have some warehouse debt that they've been lending out against as well, so they can repay that. Really, bottom line is it can drive down the cost of lending. I saw estimates about $70 to $80 million of savings per year if they use this, which is oversubscribed by about 15% for that.
So now, they did come in. I was reading it. I'm sorry. They said general corporate purposes, working capital, and other business opportunities. So that would be the working capital side of it. So
yeah. And that's like boilerplate language for SEC filings specifically. Yeah. So in essence,
so normally general corporate purposes is right. Are the other two working capital and other business opportunities? Is that something like? I thought you just needed the general corporate purposes, but I could be wrong.
Corporate purposes are like whatever.
Yeah.
The working capital specifically, that is lending. There's several different aspects of that, but it's lending. That's what it is. Acquisitions are also mentioned specifically in the SEC filing, but again, this is all boilerplate. It doesn't really tip the hand. The confusing part of that is like literally like 3-4 hours before that, he went on Bloomberg. They interviewed him. They're like, hey, these are great results. This is awesome. The last question they asked him was like, hey, your stock's up a tremendous amount. Are you guys wanting or needing to raise capital? And he didn't just come out with a straight no, because that would have been a lie. I guess he did. He actually said, we don't need to raise capital, which is absolutely factually true. Like they're not doing that because they're losing money. They're going into debt, anything like that. But I don't know, just the way that it was worded. It seemed like if you were just if that was the only no interview you heard, you'd be like, oh, they're not going to raise capital. And then right after hours, bam, they get you with 8% dilution in effect. So if this is, my mindset is it's poor timing, it's poor communication. If this is for an acquisition, there's better ways to do it. This isn't going to be wasteful. Whatever it is, it's going to be accretive for SoFi. They're not stupid. They're not idiots. They know what they're doing. Banks do capital raises a little bit different, especially newer banks. And SoFi is more than a bank, but they are very much a bank, and they're leveraging that for reasons other than what standard companies would, just because you can loan against that. So basically, it's kind of like taking on margin. Not quite the same thing. Like it's not really risky because you're not in debt for this. You are diluting shareholders, but I would be more excited if it's on the lending side, or if it's for that working capital. That's $70 or $80 million additionally per year. So that's what 3.5% not 3.5%, 3.5 to 4 cents of EPS by the end of the year. That would be gained. That's 7 or 8 cents next year. That's not nothing, but I don't want to be diluted by 8% for marginal incremental gains. If they're doing it instead for an acquisition or maybe a combination acquisition and the working capital part, that really helps fuel their crypto, which it could be, honestly. Noto talked about this in the previous quarter. If you look at the earnings transcript, where he was asked, and he actually mentioned crypto a number of times, and he said, "Hey, we're looking at 6 months to 18 months that we're not only going to relaunch the crypto platform as we had on the Invest, but also we're going to launch another number of other crypto products." He actually had an interview as well, different Bloomberg interview, but another one of those where they talked about doing all of what they've done largely without AI. Now they're using AI in-house, but not externally, and also without the advantage of crypto. They've talked about crypto lending. They've talked about tokenization actually of loans. So there's a lot of interesting directions they could go. And I would personally rather that they dilute me to go in that direction, which would be more than a marginal incremental move. But we'll have to see. Are you in SoFi at all, or what do you think about this move?
Roy,
Yeah.
you would have asked me this yesterday, the answer would have been no. Asking me this question today, the answer is yes. I am now in SoFi stock a little bit. And I got pump and dumped, and I bought a little bit after the dump part of it. But yes, now I am a SoFi owner. Cost basis in my IRA is $22.53. Thank you, Mr. Anthony. The cost basis in my actual non-one where I bought a little later is $21.01.
Yeah. So welcome to the SoFi Club. And
here's the thing, though. For me, the second buy, I get the quarter, and I'm coming in after the dilution. It's not a bad time for me to come in if you tell me, even if it is for incremental gains, that's not the worst thing for me as someone who just bought in today. But we'll see.
Yeah, I think that there's a lot of upside. There's a significant amount of tailwinds. I don't think SoFi is expensive. Even when it went up to 25, I'm like, well, it could probably go up higher. Ridiculous outperformance. And you can say, oh, it's a weak comp. When you grow 44% year over year, it doesn't matter what kind of comp you have. You are killing it. So it's a little bit frustrating, though, just because this does really kill the momentum. I think that the stock probably would have gone higher. I've seen a lot of price target raises. Analysts are looking at this as well. Now, I don't think that they hate the equity raise, but they probably need to wait until they know what this is for sure. But I will say, Evan, it's probably would have been inappropriate if you got into SoFi and it just went up and you never experienced pain as a SoFi investor. That's part of what it is to be a SoFi investor, is to have that pain, have that frustration. So welcome to the club.
I'm a Jets fan. I'm a Knicks fan. I'm a Mets fan. It fits. I'm an Apple shareholder. Apple shareholder in 2025. Before this, it's been great. By the way, one thing I did want to say, I'm seeing the chat get more active in here. I hope you guys all also liked the live stream as well. Maybe we do this as a series or something, but let's make sure this is outperforming some of the other ones that Roy is doing on his channel. New time too. But if you enjoy this, give this a like. We appreciate you in here. I see donuts also. That looks like a paired comment. We got one comment in my chat. Shout out. Big days. But give this video a like. We appreciate you all being here. It definitely makes sense. And listen, someone asked, why is SoFi down following the earnings? Great earnings. It's because of this. And right now it's being seen as a negative. There is still a chance for this to be a fantastic W. Doesn't mean it will be, but we have no idea what this is for. Again, weird way to communicate it. But at the end of the day, it's execution, not communication to the public.
And they execute. They absolutely do. Yeah. So I'm not shook by this. If this is a company that was buying private jets and gold mines, then I would be upset. But we don't have to like the timing. We don't have to like the communication. We can still say, hey, it's they're going to use it well for whatever it is. Looking forward to hearing that. And I'm sure that we'll know more relatively soon. So this was the other question. I've seen a couple of PayPal comments. Donut asked about this as well. Why about PayPal? So
tell me more. We got the shirt. You sent me. I asked for a picture of your face before this, and we got a little Alex Chris thrown in there somewhere. A doppelganger.
Yeah, it may have been Alex Chris. Who knows?
They are giving PayPal zero respect. The quarter was great, and they don't buy that PayPal is going to be able to compete in this fintech world.
Yeah, and so the frustrating thing for me, as investors, sometimes these things can take a long time, and the nice thing is we have time on our side. A lot of people have asked me, okay, why did PayPal drop that much? So previously, like if you had told me like, hey, I come from the future, PayPal's going to drop almost 10% on earnings, I'll be like, okay, well, was it like a really red macro day? Well, no. Okay, so why do you think it dropped 10%? Like I would have said, well, maybe revenue actually came in much softer than expected. They have that 5% Braintree headwind, which abates, by the way, after this quarter, not fully, but most of the way in quarter three, quarter four, full growth resumes. But it's a 5% top line headwind. Or, EPS was one of those things where I'm like, it's going to come in a little bit softer. I actually came in line with where analysts were expecting. Usually I'm ahead of them simply because they had a lot of expenses that they indicated in quarter one that they were moving to quarter two on the marketing side specifically. Or, possibly guidance. They guided so terribly, but none of those were true. Like it was a triple beat. Revenue, they actually crushed expectations. It's all relative to expectations. So people are like, well, SoFi is growing 44%. And PayPal put up 5 or 6%. It's like, but yes, but there's headwinds, and also it's a massive company, so it's not really apples to apples, but it's all relative to expectations. And when the market is expecting your company to grow 2%, and you crush it, and you do significant more, $200 million more on the top line, and you increase guidance, and you show actually 18% EPS growth, which very solid, very good, not like ridiculous or amazing. It's like, well, it's weird that it would fall like 10%. And I don't have a good explanation of why. Like free cash flow, maybe. But again, that's very lumpy. And it's something that I think that they could have commented a little bit more on. But they reiterated 3 different times, like, hey, we're going to have $6 to $7 billion of free cash flow through the end of the year. So, that this is not a company that over promises and under delivers. It's actually the opposite. So I'm like, I'm not sure what people are seeing other than, for whatever reason, zero respect to PayPal right now. I do think that this is probably the last challenging quarter that they had, simply because of those Braintree headwinds. That doesn't mean they'll never have challenging quarters again, but man, quarter three is going to be very, very good. Quarter four, very, very good as well, like significantly so. And they have so much that they've not built into guidance that the market is not priced in there as far as upside. So I continue to hold there. I can't add because it's overweight, uncomfortably so. So I'll just sit through the pain and cry, I guess. But you into PayPal at all, or did you have any thoughts on their earnings overall, or the company?
I don't know. PayPal is one that just doesn't get the respect, and it hasn't for a while. Alex Chris coming in, he got a couple quarters. What quarter was this for Alex Chris?
This would have been
7. 7. Whoa.
Yeah. He's going to hit a 2-year mark. I'm not counting like quarter three, 2023 when he came in, because he'd been there like, a couple of weeks. So
no, I'm definitely not the expert in the PayPal space. So it's one that I've been watching from the side. Why Fintech in general? Why is this an area that like you're in and a fan of? What about this sector that makes you want to be in it?
So this was largely a couple of things. One is, for the most part, it's pretty easy to understand, at least for me. It's not rocket science. I don't literally have to figure out, rocket propulsion and rocket lab and delivery, in this space. Cybersecurity is an area, that I'm like, also like, hey, incredible growth. This is great. But my understanding of that's very limited. My capability is just really not there. Now, there are some cybersecurity companies I'm interested in, but I feel more comfortable investing in something that I actually know. I've run a business before, a small business, multiple employees, used eBay, used PayPal, used a few others as well. But so I get the space. The other thing is, when I was first entering this space was early 2023, and Fintech was just written off for dead. And I was looking at this and I'm like, okay, there are, like with Robinhood, that was, I called it the golden confluence. You have higher for longer, which is actually really good for Robinhood. It's also really good for PayPal, although not quite as extremely good. You have at the same time of that, basically the bull market emerging. You also have crypto, the bull market ramping up. And I'm like, this is stupid that Robinhood would be trading basically at their cash position or enterprise value just over it. Absolutely ridiculous. I'm like, this is dumb. I'm going in heavy with options, which I normally don't do. But I'm like, this is an opportunity. And of course, it exceeded my opportunity. And the company is actually far better than I expected. So I shifted from a substantial trade to a long-term investment. It's actually my largest holding right now. All shares, no options. So, it wasn't just Robinhood. It was SoFi was undervalued and underappreciated as well, written off for dead. And I'm like, okay, student loans, that thesis is changing, but they're not just about student loans as well. As rates fall, of course, lending ramps up. They're growing rapidly. Higher for longer doesn't really hurt them. They don't have the golden confluence like Robinhood had, but they really benefit from this. And PayPal the same way, that it had been written off for dead, both from a company standpoint. And honestly, when I got into PayPal, it was as a trade initially. When Alex Chris came aboard, as I looked into him and learned what he was about, I'm like, okay, actually, this is a long-term position I want to be in, which has been an opportunity cost, frankly. I think my cost basis is slightly higher than where the stock is today. So that's frustrating when, I've had Palantir, I have Robinhood, and even SoFi is doing really well. HIMS is doing great. But, that happens in a portfolio. There are laggards, but it was a very easy, clear picture of PayPal as well, where it's like, okay, this company's written off for dead. They're innovating actually rapidly so at this point, although the company was in far worse shape than I initially gave them credit for. And so the turnaround is pretty clear and pretty apparent in my mind. Coinbase is another one I'm not in. They do report tomorrow. Fascinating company, well engineered. I do want to be careful. I'm a new bank as well, so I want to be careful to not be too heavy in fintech. So there are some areas that I'd like to trim over the next year and cut back on.
What do you think you want to go into though? You
Yeah,
said HIMS.
so-
That was one I heard.
Yeah, I wouldn't mind having more HIMS. There's a couple of smaller manufacturing companies that are in the semiconductor industry. One is Air Test Systems, which is a micro cap that
I know
I'm
them. Yeah.
in the invest.
They do the burn-in testing.
Yeah. A really interesting company. What they're saying as far as the GaN testing specifically, that they're doing not just they're doing the testing at the wafer level, the first one to do that. Also, they're doing, it's not just one set of wafers, but actually 9. And so they're able to do this more efficiently or for longer for companies than anybody else. So it's not the same. Don't think of it this way in terms of, but it's like Palantir when they first came out with AIP. Alex Karp was essentially saying that things shifted from them going to customers and trying to sell their products to customers, seeing what they were able to do shortly after with the boot camps and everything. And they're like, high demand. They're like, how are you doing this? And how can I get involved? I want a part of this. And he talked about not being able to keep up for demand. Now, Air Test Systems isn't quite there, but that's really what's happened with GaN as they shifted away from silicon carbide. They still are in that. And the great thing is, like, whatever chipset that's out there, they're going to benefit from. But there's a massive ramp for GaN. They're very differentiated. And the way the CEO talks about that opportunity there, the TAM, they're going to get a lot of that. And you look at where they're trading, it's pretty reasonable. I was so excited yesterday to see it fall by about 10%. I'd love to see it keep falling. I have a small position, but that's one I'd like to grow. There's a couple of others too I'm looking at. Like if Cloudflare really dumps on earnings this week, I would love a piece of that. Great company. It is very expensive though. Coinbase, I wouldn't mind, although it's fintech. So I'd probably trim maybe a little bit from my other fintech holdings just to make sure I'm not too exposed to that space. But yeah, it's just a space, at least for me, that's easier to understand. And there's a lot of headwinds that shifted to tailwinds from 2023 to today. And those tailwinds continue to blow, like for Robinhood especially, but also SoFi.
No, I appreciate that answer. That makes sense.
This comment is true.
PayPal's been a tough one.
Yeah, it has been. And like, so if you have, like, we're kind of biased by
one thing I will say though, if it's going to go up, the longer the base tends to lead to some bigger stuff. It doesn't mean it's going to go up, but if/when it does, we're always going to have a good couple quarters in here with this waiting. You get rewarded.
Yeah, and I'm very confident in it. But again, like, I reserve my right to change my mind based on data. So like, if for instance, what I'm saying is the company is performing very well, the stock is terrible. And so people ask me like, how long will I hold? It's like, well, until the thesis changes. And I've gotten out of companies before when I see the thesis either weaken where I'll reduce my position or just changes completely. And I'm like, all right, I'm out. I'm done. So I'm not afraid to do that, but I don't do that on the basis of a stock movement. I think that that's a mistake. Now, it's not always a mistake. Honestly, in hindsight, if I got into 2023 and I'm like, oh, looks like this is going nowhere, that would have worked out really well. But you only know that as far as opportunity cost in hindsight.
Do we talk about this company that you love is performing well, the stock price is not going up, does Roy buy more?
No, not a PayPal. I can't. It's I would have to look at where it is now, but last week it was like
Do you ever
18
use
or
like options at
19%.
all? I'm not an options expert, but I know there's whether it's, I don't know, there's ways you can extend those kind of positions and
Oh yeah.
like add to like the corners of them, you know?
Yeah, there's a lot of different options you can do with options, pun intended there. I have thought about writing deep in the money calls in PayPal if I was going to add more, rather than out of the money calls, which have a lot more risk. There's risk either way. What that does, basically, it's a form of leverage. In my mind, it's the safest form of leverage, although, again, there's always risk, just because if you target about 90 delta on the strike, so you're deep in the money, you'll get about 90 or maybe 95% of the move as it goes up each dollar. Of course, gamma fuels that, but you can buy significant larger stake as far as that price appreciation than you would if you bought pure shares. Now, I have a lot of shares of PayPal. I don't plan to sell those again unless the thesis changes. I also have leaps that are out of the money, even more out of the money now after the move this week, but they're not ridiculously so out of the money. Like I'm looking at a year and a half to 2.5 years out, and we're looking at, move up to maybe $100, $90 in some cases as well. So it may not move. Those get burned if so. But basically the weighting in my portfolio, it's overweight. I've got, usually for companies, unless I see them as absolute unicorns, I don't add above 10% to them unless it's in like a swing position, swing portfolio. So that's when options come into play, and I'll take gains on that or losses as we go along. The shares I usually just hold on to long term. Boring.
No, that's fair. Hey, listen, everyone's, especially as we get to this point where we've been running like crazy, people want to do some weird stuff after they're up 100%, and then they'll end up down 100%. And for anyone who doesn't know the math there, even if you go up 100%, then you're down 100% after that. Yeah, you lost all your money. You didn't make anything. Yeah. So I hope people don't go in and do this, but it tends to happen a lot. And what I say sometimes actually is, if you're doing that in your first 6 months, a year of your investing trading career, that might not actually be the worst thing. So you learn for the next 40, 50, and you did that mistake with a lot less money. But I think the boring ways to go. My largest holding is QQQ. I am a diversified ETF guy, and we're here talking to people who love to do individual stock picking, who you sit here and put in the time and effort to go in and do it and try and beat the market. And sometimes I respect the market enough to know that my largest holding should be these diversified indexes.
Yeah, and it makes sense. I mean, you're basically betting on the American economy, or at least a segment of it, and it's hard to lose that bet. And there's been
average
a lot
in the stock market. Average in the stock market is really successful. Average has a negative connotation in a lot of places, but in the stock market, it is a fantastic thing to do. That's compounding your wealth at 9-10% a year.
So in essence, today is kind of like the earnings day for your portfolio, just because of the GDP news.
Yeah, kind of. I also got a lot of Meta, and Robinhood. I'm excited.
Okay, so let's talk Meta then. Earnings are coming up. What are your expectations? What are you looking for? What are some things you'd like to see? Because I think it's a great company. It's not one that I personally want to hold, but it's fascinating what they're doing.
So maybe we can dig into the numbers. I haven't gone in enough to like predict what the numbers are going to be. I think when you're looking into this, what is clear is Meta is going into an investing cycle. They are investing heavily into super intelligence. Zuckerberg put out a piece today saying, hey, we kind of think it's close. This can go right. This can go wrong. We're going to try and make it go right. But I think the message is they think super intelligence is close. They're investing very heavily into that. If you look at like kind of what Amazon does, they invest heavily. Stock doesn't do as great in that period. Then they pull back on the investments and start to profit for a while. That's when the stock does well. If you look back to Reality Labs, that was a very big headwind for the company. Now, one of the things that is more going in favor with this investment than the Reality Labs one is the market actually believes in AI than more than the other one, more than the metaverse. So you might get the opportunity, you might get a pass on this massive amount of investment. But the truth is, we are putting a lot of money in now in the hope that it gets to money in the future. Markets don't always like that. They like the money in the future being made right now part. So
Yeah, for
I think
sure.
we're battling with, this is an investment into the next big opportunity. Markets don't like that. With the markets really actually do believe in AI. My expectation here, if I was going to give it to you, I think we get some negative numbers off of this quarter. I think the market, whether it's capex, whether it's EPS coming down a little bit, whether it's, I don't know, but yeah, the market loves a year of efficiency. I don't think that's what the message we're getting from Zuckerberg on this call is going to be, a year of efficiency. I think it's a year of investment.
Yeah, not with those, millions, multiple $1 million deals that, you'd be like, oh, this is a star baseball player, football player. No, these are AI researchers, although Elon Musk doesn't like the term, but oh well, it's what Zuck's choosing to use, and he has a lot of money behind it. So yeah, it relates to what you're saying. Nvidia is going up. What happened is every week is earnings week for Nvidia. In the essence, with these mega cap stocks, large cap tech, hyperscalers, they can't get enough of the product. They can't get enough of the capex spend. It's not all going to Nvidia. There are other players, of course, there, but a significant chunk is too. So as you have Jassy, as you have Zuck and others come out and say, hey, we're spending this much in capex, and we just had Google do that last week, that's really good for Nvidia. So all roads lead back to that company, and they report last, and they frankly, honestly, by that point, you kind of know what's happening there. Now on Meta itself, what I find kind of interesting is, you mentioned Reality Labs versus like the AI and the AI push as well. I do agree with you that the market does believe in AI a lot more than Reality Labs. That was one of the issues previously. I'm curious, do you think that a lot of this AI implementation and this AI push by Zuck is, again, to go back to that metaverse, specifically to create, not just, a visually appealing system, but one that's dynamic, that integrates AI, both that's actionable, that you can actually use for real world scenarios, but also something like a Ready Player One type of virtual world that's dynamic, that evolves and changes over time, which really could only work with AI executing well? Or do you think that there's that's?
I think Ready Player One was the original vision. The market told you it didn't believe it, and it turned into an augmented reality one, which is maybe what you got to see first. So I don't know what Zuck believes. I don't know if Zuck believes what he believes versus what, like, hey, this is what the people want. But there definitely was a shift from the Ready Player One, that's what this is going to be, into the augmented reality version of it, for sure. What was the other part of that question? I kind of got Ready Player One, great movie, distracted me a little bit on what the question was.
Better book. Read the book. The movie is
Roy. I don't read. I'm sorry. I read enough articles. I get made fun of by specific people in my life, but
yeah. So shortly after I finished my master's, I'd done so much reading that I was done with reading for a little while, and I had a friend challenge me. So I've ramped rapidly from no reading to 6 books a year to 12. Now I read about 60 to 70 books a year. So can't get enough of that.
What's the genre?
So right now, since I'm in my PhD, it's almost all fantasy and science fiction. When I'm not heavily involved in research, I'll use about half of my time heavily on the biographies, on nonfiction, some investing stuff, a lot of history. I love history. I can't get enough of it. I actually just finished one, which I've read books on this before, but on the rise and fall of the Eastern Roman Empire, so Byzantium, and it was fascinating as always. So, but usually, like right now, my mind is like so engaged in the PhD side. It's like I need something light and easy. Although science fiction and fantasy can go deep in philosophy, but yeah, that's my entertainment.
So
is that in the market?
The route I go down, because I enjoy the same things, like the history. I like geography too and stuff like that.
Ooh.
GeoGuessr is a fun game. I don't know if you play.
Yeah, I've not played it. I know it though. Yeah.
I never played it, and then like last week, someone on stream was like, "All right, you should play it." So I played it, and now I was like, I knew I would like it. I knew I would like it. I watched just like there's like educational YouTube videos is kind of where my version of that goes down.
Oh yeah, I'll do some of that too. But yeah, that's but it's just something a little bit different. I'm so engaged in this type of world. It's nice to take a break from it and just escape into a book for a little bit every now and then, or sometimes it's a book on audio. I've got a long commute, frankly, and I can supplement rather than waste that time. I'll do a lot of listening to like earnings calls, earnings transcripts, other people's thoughts on the market, but I'll also do a lot of like history and podcasts and some reading. So yeah. As far as going back, go ahead.
Meta, though, I want to ask why we don't own any. Is it just too big and you kind of, that's just not your investing style?
Honestly, and this is not a reason for anybody else to not own it. It's just a philosophical thing. Like most of what they do is in very aggressive social media, Instagram, Facebook, WhatsApp, not as much. Where I just think it's toxic for society overall. Like, and it's ironic because we're on X, we're on YouTube and everything. I don't view those as nearly as toxic, as deliberately addictive. Although you could argue, with Reels, maybe YouTube is at that point now. But I also see that especially in young people, and it feels to me. And again, this isn't saying that even in that it's wrong to invest. I like to invest in companies that I actually like and I like what they do. It feels to me like investing in like a tobacco company that has they shouldn't be doing this, but they found a way to sell to minors. And it's like, okay, that I can't do that. That's just not right for me, even if they make a lot of money. And so this is a place where I'm like, okay, Meta is a great company. Zuck is an incredible CEO, like fantastic CEO. I have no doubt that Meta's future is very bright. And I also hope that they don't make it. So I don't want to root against myself and have money in there that I'm like, I hope secretly that this tanks. Instead, there's so many other really good companies out there, so many other places to invest. I would rather invest in things that I'm very comfortable holding, where I'm aligned as far as most of the goals, the emphasis. It's not that there's any stock out there that's pure and innocent and all wonderful, everything that they do, and it can't be abused. But that's just my level of comfort personally. So that's why I'll never get into Meta.
That's fair.
And I'm like, Zuck's awesome, Meta's awesome, great company, and I hope it goes down in flames. But not for shareholders. Make lots of money along the way. Other mega cap stocks that are coming out. So you mentioned Amazon. Is that one that you own as well, or is that one that you're just more on the sidelines and it's massive?
I own most of the Mag 7. It's kind of just more which one do I own more of and which one do I own less of.
So is Apple or Meta, is that your number one Mag 7 or
Apple?
NVIDIA?
So here's kind of what I have invested these different periods throughout time. So I bought Apple when I was 13. We can go by age, but I'm 27 now. We just turned it. So I've owned Apple for like 14, 15 years now in that account. I sold out, enough to take out my initial cost basis a while ago, and I'm kind of just holding it. I had a choice if I want to build around that position or kind of sell it and get it to where I wanted to go. I chose to build around it. Apple's my largest holding. NVIDIA, kind of a similar thing, just that was more like 5-6 years ago. I bought it for a whole different reason. And then AI came out of nowhere, and here we are up 2,000% on that one. And then Meta's one that I'm excited about now, and I've added more to. I don't have my cost basis on Meta is 310 compared to 756 on NVIDIA and 1065 on Apple. So Meta, Tesla, Amazon are the three that I've been building more of a position in. Microsoft and Google have kind of
interesting.
Own a little, not as much. And then Apple, NVIDIA, I've owned for such a long time and have like,
And I get that too. People ask me like, why haven't you sold all of your Palantir? Well, I've taken a lot of gains, but like it's an amazing company. I'm aligned with where they're going.
Roy, girl math. I don't know if you've heard that girl math thing. Boy math is that when when I'm up 3x or 2x and I sell out half, that rest is free.
Free. It is. So,
that's my boy math version.
I like it. Yeah. No, honestly, free shares. I like it. And that makes things for you for Apple, NVIDIA, certainly is appreciated a lot. I'm a shareholder there too. I'm curious on Tesla. So, of course, we had earnings already. The numbers themselves, which Tesla does not trade by numbers, it trades on the narrative, were terrible. The narrative may be a little bit different. We've seen the stock be quite volatile over the last week. Are you just kind of holding pat where you're at in Tesla? Are you slowly adding, or are you thinking about reducing, or where are you at with that company?
Yeah. So one of the we got Mikey B in the chat. What's up, Justin? Appreciate you being here. One of the reasons, like, I love your channel and the kind of crew you guys are rolling with. You guys are so smart. You're digging into the numbers and everything like that. And that's honestly why I kind of want to also do this with you, so I can learn more about a lot of this stuff. One of the things that obviously I want to confirm the numbers. I have a finance background. I'm looking at this, but one of the fundamental things that I believe right now is the pace of innovation is very quick, is happening in all different areas, and is speeding up. So like, I do want to speculate on some of these larger themes. I don't want to I don't always want to give like 200 PE and buy in at those points. Like, I still want to be reasonable. But the pace of innovation is moving so quickly right now. This robo-taxi rollout, people are looking at it in a certain way of, oh, there's only 10. It's a tiny little area. Is it going to be better than Waymo? Is it going to be better than the other competitors? When I'm looking at this, I am seeing robo-taxis are here right now. The very large, 100, maybe even $1 trillion per year, the automation, like the car industry, even the mobility industry in general, is something that is being disrupted right now. And there's a lot of opportunities coming out of that. There seems to be an Uber versus Tesla. If one's going to survive, I actually kind of like both of them in this world. Companies that are focused on the future of mobility, and that's kind of where I want to be invested. And I also want to just be behind Elon Musk. So all of that to be said, what is keeping me in Tesla stock at this point in time is this robo-taxi vision is actually happening now. I think that it's going to surprise people how quickly cars go from no one understanding that cars can drive themselves to people realizing that these are on the road right now, working, expanding quickly. And it's not just Tesla. Look at Waymo. There's a difference between Tesla is trying to solve it without LiDAR, which would be a big cost area. So we could talk about that specifically. But I think people don't fully give the respect to the pace of innovation right now. And yeah, so with the numbers itself, now that's pie in the sky. What's actually happening right now. Elon Musk told you there's going to be an in-between period when they see this grand vision, and we're losing all these tax credits from the guy that he helped get in office, which is kind of ironic when you look at it. So there's all these different things going on. You probably are going to have, like, there's no reason why this stock is going to move higher in the next 6 months. There's no reason it won't too, I guess. But like, yeah, you're probably in an in-between period right now. And the question is are robo-taxis here right now? Are they going to be able to monetize it? And I think the answer is yes. I bought some more after the earnings.
Yeah, I'm going the opposite direction, where I'm not bearish Tesla, and I always want a piece, but it is my smallest holding by intention. I took some gains in the 400s and the 300s as well. I think that Elon Musk is an incredible man, incredible CEO, but some of the choices that he's made, and I'm not saying they're right or wrong choices. In fact, I actually agree with them more often than not. But they have limited and damaged the TAM. I think some of that was overstated initially, and then kind of doubled down on it too with the messy breakup with Trump, which wasn't great to see. I just kind of wish they parted ways amicably or didn't say anything publicly. But I think that that'll be a drag on not just Tesla as a business as far as the cars, but also robo-taxis. If you don't like or trust Elon Musk, and he's ticked off a lot of people, you're going to be less likely to jump into a robo-taxi. Also,
they're gonna license it though, so I don't know. People are gonna do. Most of them aren't even gonna know like this is robo-taxi tech or even Waymo tech.
But that said, like, unless they're doing it specifically in Teslas, that's several years out as far as like being able to make sure that everything is working on whatever vehicle that's licensed out on. And there's regulation that's needed. There's a lot that's needed there. So it's not a quick turnaround. So some of this brand damage can fade over time. Now, the other area too is bots, which are a little bit further out. But Optimus, there's people now that maybe 3 years ago would have been loving a Optimus bot in their homes, and now are like, I don't want Elon Musk spying on me, which is not what's happening. It's not the way that tech even works. I mean, we don't know for sure, but at least inferring off of Tesla and also the mission and mandate of Elon Musk, that doesn't make sense. But that still will limit some of the TAM. Now, there's still a corporate side of that they're going to do a lot of business in, but those are further out. So what I'd love to see personally is the stock to actually sell off, which it's not doing, and to be able to get more at a lower level. But for myself, I felt it was appropriate to or to position according to my conviction. And it's long term, Tesla is going to be good, but man, I don't know. And I say this as a guy that just bought a Tesla, by the way, last month, a brand new Tesla. So ironic.
It's fair. No, listen, I respect it. And in the chat, Carl's talking about the competition for coming from Chinese EVs, also coming from the Chinese full self-driving startups. They're coming. If you don't think all this stuff is here now, the Chinese market, a lot of subsidies in there, is a very compelling reason. These Chinese EVs are never going to there's going to be problems in other parts of the world where it's going to there's a large lane in the most profitable markets for the US version of whatever this is to take it over. And I see those as a good thing. Like I like there's this Tesla versus Waymo, US versus China, but what I think it really is this tech here now, or is this tech 10, 20, 30 years away? Even 5 years away, you probably don't get the same valuation right now.
I agree. And again, I want to hold it long term. Like the Chinese EVs, like if Tesla was only an EV company, I'd be more concerned, but it's not. And you even see, them in China now with full self-driving, which is working well. And it here, even before that launch, it was getting attention from Chinese EV CEOs, specifically. I think it was Huawei. No, that wasn't right. I can't remember who it was, but overseas now in China, like it's turning heads. People are impressed at what they're able to deliver. I think that product is differentiated, and I think it's a lot more compelling, especially from a cost standpoint, than the LiDAR system of Waymo, which, I mean, it's working. They figured out a way to scale it a little bit more quickly, but it's not a one-for-one comparison. So, if it was just an EV company, it'd be like, well, that's not great, but it's not. So I hope that it falls. We'll see. It may not. That's why I'm holding into position as well, and I'm happy to have it at the current size it's at. So, Justin City, thank you for that comment. He said, "Hi, Evan. Hope this doesn't sound ignorant. But who's this guy speaking? Name is Roy, but Crossroads. You can just search for Crossroads, one word, starting with a C, on X. I'm also on YouTube as well. You'll see the YouTube link there on my portfolio. But thanks for that comment, Justin.
Cap. I actually type with a K a lot, and I struggle to find it sometimes. But Crossroads, I'm a big fan of what he's doing. You should definitely go subscribe to him.
Yeah, the tough thing is, like, the C was available on X. It was not on YouTube, and I'm like, okay, so do I completely change to something that's unified or just go with it? So, I got both covered, C or K. I had to give the bots more opportunity to be able to mimic me either way. So that's what it is.
The bots are crazy. Do the bots ever come on the YouTube chats?
Yeah, usually it's on the more popular videos. Not the live chats for me. It hasn't happened yet, which is a good thing because I don't have too many moderators. But yeah, the videos that are more popular, they get some engagement. I'll have like 2 or 3 sets of bots, which are like, hey, these troubled times, you need sound investing and go with a scammer. And it's all the same script, basically. They've actually gotten a little bit better. The bots have. Sometimes they won't quite trick me, but I'll initially well, I guess I do. I'll like a comment. I'll be like, hey, that's a good comment. And then I'll scroll a little bit further down in that reading. And they go from like, these are great points. And yeah, I think SoFi is going to do X, Y, and Z. And it's great leadership. And it just reiterates some things that I said. And then it's like, just like so-and-so said, and it's got like a scammer site. And I'm like, oh my goodness.
They've gotten better on X too, honestly.
Yeah, they have. Like, so there are some, like, I almost feel like some of the more dumb bots and more obvious bots are just there so you feel like you've caught the bots, and then you kind of let your guard down along those that are a little bit more savvy. So
we got Christy asking about Rivian. You got any Rivian thoughts?
Yeah.
Because that one is just an EV company, but
it is.
The pricing is nowhere near where Tesla is at. And when you kind of look at Rivian's, like, you might, if you're like a sum of the parts type person, you might look into Rivian and be able to speculate. I think their cash pile, it's a large I think they have a couple quarters of runway, but I might have looked at this a year ago and it might be a different state.
They do. They had it wasn't an equity raise. It was actually an investment. It's a Volkswagen.
Oh,
I think
yeah.
it was Volkswagen a couple of quarters ago. That gave them plenty of runway. They still do burn cash. Mostly, they did have a profitable quarter. A lot of those are regulatory credits. The tough thing for Rivian is the tax credit going away. I mean, it's very hurtful for Elon Musk's company Tesla, but it's really damaging for the Rivians and the Lucids of the world. Like it's crushing. There was a time when the tax credit being cut looked a little bit different. That if you sold under a certain amount of models, like you would still retain yours for another year. Thankfully, they did away with that. I don't think it's right to do to award the weaker competition in the market. Rivian would have benefited from this. So there's going to be, just like there is for Tesla, a massive demand lever that's thrown forward for quarter three. People that aren't going to buy a Tesla that like Rivian, and I think it's a really good product, honestly. And I like the truck better than the Cybertruck, but it's pretty pricey. But there's going to be people that are thinking about a Rivian over the next couple of years to just buy it in quarter three. If they can save $7,500, it makes absolute sense. So I think quarter three will surprise people. Quarter four, just like for Tesla, because that demand lever has been thrown forward and the price suddenly is increased by effectively $7,500, or they have to burn more cash. That's going to be a massive drag in a quarter that usually for this type of business is very, very strong. So I think it's a good company. It's not going to go bankrupt. At the very worst, I think that they get acquired by somebody. Makes a lot of sense for maybe like a Ford to acquire. I know they've had an equity raise in there before. Maybe Amazon, but I don't know that Amazon would go for that. Volkswagen is a possibility as well for another car manufacturer. Even an Apple might make sense. But yeah, so this is one where it's tough, and I don't mind small speculative positions or swing positions in something that's tough. But I think that there's clearer plays that I'd personally rather be in, and I just don't have the confidence. But I will push back a little bit on what you said, Evan. It is an EV play, but it's not just about the car cells as well. Some of the technology as well they've licensed or they've made cells on. So what they're doing is interesting. I really hope that they make it, and I hope they make it as a standalone company. I'm rooting for them. I just don't know that I want to invest here.
Yeah, Rivian, great tech. Lucid also. Not buying the stock. Lucid also has some fantastic tech.
Yeah.
I can't believe how much money I made on Roycoin. I'm a big fan. I actually got in pre-ICO, if you guys don't know. Pays to be on the inside. No, I'm kidding. But yeah, Lucid has some great tech. These Chinese EV companies are great. They're also doing some good stuff. They're also leading on self-driving and all that stuff. So it's a really interesting space. I don't know how some of the Fords of the world are going to play through this, but
yeah, I mean that really is just a vehicle company, and the thing, unlike Rivian, which they have a lot of cash, they are doing cash burning. A lot of the others, like the Fords of the world, they just are sitting on a massive pile of debt, which is going to be hard for them to ever get rid of. Some have less than others, but I mean Tesla doesn't. They have a massive cash pile, so Tesla's absolutely going to be fine. Rivian's going to be okay, but it's more challenging for them. I did want to ask one question while I see this real quick. Any thoughts on potential contenders for SoFi acquisition? If it's an acquisition, probably crypto acquisition, maybe something like Bakkt. They also did an equity raise yesterday. That could have been them possibly poison pilling themselves against an acquisition. I don't know. It was a big equity raise. That company went down by like 40%. Anchorage Digital would be a good one. It's a private company, so it's hard to get a sense of the valuation. That would be higher, though, than what the amount that SoFi raised. So that might be a little bit aggressive, but it should be something related, not just, it should be hopefully something related to the lending or the loan side as well, maybe the tokenization side, more so than pay by crypto. I wouldn't be too excited by that, but it also could be for other reasons. We talked about that a little bit earlier. So I want to ask you real quick, Evan, we're going to wrap up here. Coinbase is reported. Do you have any interest or position in Coinbase? And I'm going to ask you about a specific product too.
I do not have. No. The answer to that question is no. I do have interest in it. Yes, I know a lot of people do. I have not dug in super deep on it. The full transparency is I don't love the broker business. I love Robinhood that much But that was one of the things that kept me out of this stock a little lower. Is it's not necessarily a business I want to be.
Yeah, and that's where I was too. They've added basically a whole payment saying if you're bullish USDC or Circle, like you should be bullish Coinbase as well, because they get 70% of the revenue, 50% revenue share, 100% of what's spent on Coinbase, and they have a stake in Circle as well. Now I want to ask you about this though. They announced, oh, that's not right. There we go. They announced Base. They have Base as their system, but specifically, it's a social media, not just a social media, creator website where you can build and launch things on chain and basically monetize like even posts or pictures, post, trade, chat, earn all in one place. You and I are on social media as well.
Interesting.
It's have you seen this at all?
No, I've not.
Yeah, it's something that they announced recently, and it's really weird. Not weird. It's just like you wouldn't expect Coinbase. They have great engineers, though they're doing some very interesting things with crypto.
Well, you see, Elon wants to go the same thing from the other way. He has the social media and wants to add payments. So I guess it's not the craziest thing.
Yeah. An open network for the global economy, and it's kind of interesting, like that you can post something and monetize that post and choose to get paid by microtransactions in crypto as people buy that post or visit that post. It's odd. So what do you think? Oops. What do you think about that as a creator before we dismiss?
Um,
Because I know Robinhood also, like Robinhood has talked about or at least thought of, and I think they're not the only ones, like some sort of social media thing, just because they see what's happening on Finex, they see what's happening in StockTwits and other places as well.
we'll say it like this. I have talked with multiple companies that are like in different areas that are basically like, we want to start a social media app. What do you think? Like, what are like, not like that exactly, but like, what would you do? What wouldn't you do? That type of thing. So there's been actually some really large companies that you maybe wouldn't necessarily expect. So the concept, I'm not fully surprised by. Anything in this space that's like getting creators more opportunity and money and stuff like that, I'm good. I'm happy with, because someone will see this, Zuck will see this, steal it like Zuck does, and then it will get added into it. So whatever they get added will, and if it's really good and loved, people will take it. So yeah, I don't have to. I have to look deeper into it. I'm not a big crypto guy. I like Ethereum. I like Bitcoin. But some people, there's a lot of I don't get crypto. I don't get all this other stuff. Like, I don't know what's happening here beyond just like, okay, the underlying tech of crypto makes a lot of sense. A currency for the internet. We drew lines on a map and now we can't send money over them. That doesn't really make sense. So there's concepts that I definitely understand here. I've always had the thought with crypto in general that this feels like a tech that's going to be utilized by the JP Morgans, the SoFis, the et ceteras of the world, rather than tech that's going to create a whole new ecosystem of companies. And I think we're starting to see that more and more. But yeah, I if your pitch is it's this for crypto, I don't think that ever is going to work. So
yeah, it's more than just crypto. What I find a little bit ironic. So back in, I think it was 2021, Dan Schulman, CEO at the time of PayPal, wasn't in PayPal at the point. He was mocked and derided, and frankly, I think it was deserved, for basically saying PayPal was interested in buying something like Pinterest. And it's like, what? Why would the payments company get into this? Now, this is a little bit different, but I think that there's a dream probably from every CEO out there that is in fintech, finance, crypto, of doing like a WeChat or a WePay and having like the everything app. Elon Musk, we've seen that with X. We've seen that, them talking about that in other places as well. Maybe Coinbase has similar ambitions too. So I just think when you're going so far out of what is naturally in your wheelhouse, like that's a big ask. That's hard to do. But it's interesting.
Focusing. This might be what Tanner's comment is about, like the et ceteras of the world. There are 50 billion things that you can do. I struggle with this. Great companies know what opportunities to say no to.
Yeah. And that, honestly, you can try to do too much at the same time and just not be effective in what would be your wheelhouse. So Something to keep an eye on with Coinbase. Great company though, so it's interesting. It's worth keeping an eye on. See if it works. I kind of hope it does. So anyway, Evan,
I'm going to.
Go ahead.
I think I'm getting the chance to ask Brian Armstrong a question, and
Ooh.
clearly, I want to ask a good question. So if anyone who's really following that stock has anything that they want, first you have to give this stream a like on Roy's channel, and then I might take your question to Brian Armstrong.
All right, there you have it. Evan, where can people find you?
Stock market news. Search for that somewhere, and you will see it. But hopefully they can find me on the next time we do this live stream in a little bit of time. I enjoyed this.
Yeah, and I just put his handle here for you guys. If you're not following Evan, be sure to do so. If you care about the markets at all, he is a good guy to follow. Just a great person as well. Always reasonable, always cautious too, to make sure that he's reporting accurate news. Not always the case on X, but with Evan it is. So Evan, thank you so much for joining me. This has been a lot of fun, and happy investing.
Appreciate you, sir.